Everybody, welcome. This is a nice little collaboration between Nomi and Free Agent we've got going on for you today. We are going to be talking about all things MTD. It's going to be MTD, income tax compliance, overcoming the challenges and common pitfalls is the title of this. What is MTD? Why does it matter? Who's impacted? And what can we do about it? So, joining me today is Stu McEwen from Free Agent. Stu, do you want to introduce yourself quickly?
Yeah, thanks for having me. Yeah, I'm really looking forward to today. I'm Stu McEwen. I'm a staff product manager at Free Agent. And what that means, it really is I look after all our tax and compliance products. So me and my team are the ones building MTD and have all the joys of that. But we also look after your payroll, your corporation tax and all that kind of stuff in Free Agent. And yeah, living and breathing MTD literally every single day. So very much looking forward to chatting.
Fantastic. Thank you for that, Stu. I'm Gareth. I started my career in practice. I then built and sold my own small accounting practice. I'm currently a senior account manager here at Nomi, and that involves speaking to customers, making sure everybody's happy, getting people onboarded, and sort of living and breathing our customers. Really, that's what it's about for me. Before we get too deep within this, what we're going to do is we are going to put in a poll into the chat, and it is basically going to say, how prepared do you feel for MTD for income tax? Very prepared, somewhat prepared, aware but not ready, or not familiar at all. So if you just want to do that while we finish off a bit of housekeeping, and then we can get straight into it. Have we got the poll in there yet? No, that will be there. Oh yeah, there we are. Cool. Lovely stuff. So a bit of housekeeping. This is going to be recorded. So me and Stu are going to try not to mention people's names as we answer the questions. I'm always a bit rubbish at that, but I will try my best. I promise, Uganda. Yeah, so if you're asking questions, please be aware they may get read out. And what else have we got? Yeah, it's going to be distributed this hopefully later today, if not early tomorrow. So you can watch this back and listen to our dulcet tones again. So let's get into it. I'm assuming you can see my screen. Is that right? Great, excellent. So if we go in today's panel, I probably should have moved to that earlier. But what we're hoping for in terms of what you will get out of this session today. Key takeaways being the key requirements, an understanding of the key requirements and the timeline at which you need to actually take some action on MTD. You'll understand who is affected and when, what some of the common misconceptions are, and hopefully you will also have some practical tips on actually implementing the changes. So quick overview on MTD. So actually on the webinar, what we're going to do, I'm going to give a 30,000 foot overview of what MTD is. And then Stu's going to share a few slides on the biggest challenges and misconceptions of the MTD transition. And then we're going to go into a bit of an extended Q&A. So we're hoping sort of the bulk of this will be a Q&A. It's not necessarily about just killing you with slides today. We're just going to go over essential information, and then it'll be a bit more of a discussion between myself and Stu. So back to the 30,000 foot description. We're going to go with what is MTD for income tax. So this is essentially the government, HMRC, trying to increase the digitization of the taxes that we pay as a population. So it requires digital record keeping and electronic submission for sole traders and landlords. And the stated aims, this was in a ridiculously long document, but I've refined it down to 3 points. Reducing errors, improve compliance, and move UK tax online. So that's the overview. Who is affected? We've got sole traders and landlords. And the figures that we've got on the screen, we're talking gross income. So that is sales or rent before any expenses. And so if you have your turnover over £50,000 as a business, then it's going to be mandated from April 2026, and then £30,000 from April 27, and then £20,000 from April 28. So yeah, that is a brief overview on who's affected. What is actually required of the sole traders, the landlords, or you as an agent? You need to adopt or upgrade HMRC compliant software in order to actually submit the MTD returns. Each separate business needs distinct digital records and to submit the records separately. Submissions will be done quarterly. So it's going to be similar to the VAT return timelines. So it's going to be a month, and then on a month plus a few days, and then you submit it on the 7th. That depends whether your quarter finishes on the 5th or the end of the month. And then you will have an annual MTD tax return due at the end of January as well. So Stu has a few slides, so I'm going to stop sharing my screen for a second. Sorry, give me a sec. I'm going to stop sharing, and then Stu, if you share your screen.
Yeah, there we go. That should be it. See my screen okay there, Gareth?
Yes.
Perfect. Nice. Okay, cool. Well, thanks for that intro. What we're going to dive into a bit now is, as I said at the kind of top of the call, this is my life at the moment. my team are living and breathing this. So I spend a lot of time with HMRC, a lot of time with our practices on the beta, going through how this feels, and a lot of answering questions and debunking myths. So I've put into a bit of some slides here, the most common misconceptions that we hear, both in terms of things that are factually wrong, but also a perception shift that we think we can maybe improve in the industry. So I've framed it as a few myths. So let's dive straight into that. So the first myth is that software is going to save you through MTD, whether you're a small business owner or an accountant. And it's not quite as simple as that. I am from a vendor, and I am saying that I'm not here to sell you software, but it is far more than about the software change that's coming in to kind of save you or your clients in April. It is a lot about process and habit change. The firms that I'm spending quite a bit of time with that are really showing a lot of progression through this are the ones that are mapping how the data is moving from the client to submissions, rather than focusing on which software has the best bits. There's a lot to this, and it's about getting your clients digitalized and getting them onto software, and then looking for the improvements in your firm's processing. So we've seen quite a few of the firms now joining beta that have taken up bank feeds as an option with their clients. I think the industry standards, or put about from one of our competitors, is around like 30 or 40% of clients have bank feeds. But even a simple stage as that has made a radical difference to the bookkeeping through MTD. And a lot of practices are still out there. You may be some of them in the call today that are still doing manual statement uploads, or things that require that have been done this way for a while. And I think MTD is a really good opportunity in the income tax space to change those workflows. So software like FreeAgent Nomi does come with all that digital workflow and the full end-to-end journey from bookkeeping to tax. But I think a lot of the firms and a lot of small businesses need to also adapt to that kind of digital journey. Before I joined FreeAgent, I've been here a decade now. I was a small business owner, and it definitely took a mindset shift to really maximize the software being used and the journey through to tax capabilities. So from a firm's perspective, for any accountants and bookkeepers on the call, the habits laid down today and getting into testing early and starting to build those habits, training your staff, training your clients, will make all the difference come mandation and the rollout of the next few years. Going into kind of the second myth is about the 4 tax returns. I think I've heard that a lot. I think I'm sure everyone else in the kind of call has as well. And it's really not 4 tax returns. I'll never ever say it's as easy as the click of a button. It's definitely not. That very much undermines the fantastic job of a bookkeeper and accountants in the industry. But it isn't the same workload as 4 individual tax returns and a big crunch at the end of January. I think this is the opportunity to build in check-ins with clients, or as a small business owner, regular updates on how your business is doing through the mandation of MTD. So software like Free Agent, like Nomi, will automate the flow of information. If you have a bank feed, if you have a look around on the market, there's so many tools now offering things like data entry. Free Agent has its own, I'm sure a lot of competition have, and standalone, that provide smart categorization to get the receipts in, get the bills in and categorized, and all these things. And when that's done, MTD is very much a bookkeeping problem, not an accounting problem. It makes everything far easier. So it might feel like a click of a button, and it might actually be you click a button and it sends away the amounts and HMRC give you back a tax return. But really, it's about that ongoing, regular, small amounts of effort rather than a single big effort at your end. And as I say, we've got somewhere about 500 firms and submissions through the beta with Free Agent, and it's really not 4 tax returns whatsoever in terms of the effort in that quarter and the effort to file or meet that submission deadline. Into kind of myth number 3 is around the digitalization of clients or your own business. As I say, I was a small business owner. I wasn't the most digital way back when, and there's definitely a real concern that clients aren't ready to be digital, whatever that kind of means. And when you dig a bit deeper into what this actually means, a load of clients, not all, there are always going to be people that aren't in any way digital, are already at least halfway there. There's digital tools like mobile banking is a really classic one, where businesses are very much using online banking. They may not be using all the bells and whistles of an accounting software, but that's still half the battle to becoming a fully digital business under MTD. So Free Agent, for example, we have like the most simple user interface for the small businesses. We were built for that need. And there isn't the reality of the leap between, I have online banking, or I kind of use banking, into I now use accounting software, is nowhere near as big as it might be perceived, as the fear might be perceived there. And there's plenty of software out there, not just kind of Free Agent and Nomi here, that make it really easy for yourself as a small business owner or your clients to really embrace being digital. I think a part of this as well, and I think COVID really amplified this, is that accountants and bookkeepers aren't really just accountants and bookkeepers anymore. I think the business advisor side, the business help, I go to my accountant and bookkeeper when I need help with X, Y, and Z, is becoming more and more and more prevalent. And I think the key role in all of MTD, although I called it a bookkeeping problem in terms of what you need to do inside of software, bridging software or not, or cloud software, I think accountants really have a key role in helping their clients adapt to change. It often isn't easy. I've spoken to a lot of small business owners who are super, super reluctant, and I totally get that. This is being mandated by the government. But the reality is it is coming, and it really isn't as bad in adapting to tools and adapting processes for those kind of more technophobe-faced businesses than it feels. And I've seen some really good success through that, especially with software providers and HMRC working together with practices to to kind of onboard clients and get clients used to the change in digital. For what it's worth, I think that this very much isn't the end of the road. I know MTD for corporation tax has been postponed indefinitely, but with the likely mandation of e-invoicing over the horizon and potential more digitization in the corporation tax space, I think that this is an inevitable path now of the modern tax system, the modern firms, about embracing digital. So I think this is probably a point that we won't need to dwell on too much in the coming 5 years, 10 years, whatever that timeline is. I think this will be very much the new normal of everyone being on digital solutions. Going into number 4 is about time. And the majority of practices that I work with who are not on the beta in any way, or that are part of groups discussing MTD, there is a sense that we'll get January out the way, still got the self-assessment rush or spike there, and then we'll look at MTD IT. And I completely understand that mindset. I'm not in a position to tell anyone what they should be doing, but definitely it's worth flagging there is now less than 100 working days until the mandation of MTD. I think just crossed that boundary now. And that is not a lot of time whatsoever to speak to clients, to get them signed up on the HMRC portal, to get them added to software, to get them used to software, to get you used to software. This is going to come around so quickly. There's a lot that's out there that can support you with these journeys. Very much, I'll definitely say free agent and Nomi here, because that's the webinar we're on today. There's going onto our websites, there's a ton of guidance, everything from email templates you can send out to your clients to other content on how to help price and on all of these kind of things. And there is a lot of the service providers, software providers provide this in the market as well. So there's a lot of help there. I'd encourage everybody to seek that out as soon as possible, especially before we get into Christmas, and then it's the January spike. So yeah, just a word of warning on those days to come. I very much, I'm expecting April and then the run up to the first quarter end to be hectic for most in reality. And the fifth and final kind of myth or point that we hear a lot about is that MTD is for accountants. It's an accountant's problem. They're the ones that should deal with this. And it's not really about the business. Business has been being taxed for a while. They need somebody to take care of it. And I don't think that's correct. I don't think that's the right way to look at look at this. That MTD requires collaboration, whether that's collaboration between an accountant and a bookkeeper, or a bookkeeper and a business, or an accountant and a business. The business owners really need to be involved in a lot of that. And there will be many of you, perhaps here in the chat as well, who are looking for solutions where the client don't even know that they're on software. I think that might serve for MTD benefits. You might be able to meet their tax obligations through that. But I think that slightly misses some of the advantages or opportunities that MTD brings, and that being able to be better at business as a business owner or clients. The technology out there of bank feeds, of automation, and then inside of these softwares like Free Agent Nomi, where you can see the analytical insights on them, look at their reporting, look at their cash flow, etc., etc., etc. Even though even these like really small elements on top of filing tax can help businesses drastically. It definitely did for me. I lived that journey of using cloud accountancy to file my own self-assessments, and then discovering that actually this data, these ledgers can do so much more than just meet your tax obligations. They can really help you chase your debtors and pay your creditors and all these kind of things on top. And I think businesses should be at the core of that, and it's not all on the accountant. And to be fair, I think the accountants have a massive job at the moment. I think it feels like from a lot of the people I speak to and hear from the industry, there's a lot of expectation that HMRC are expecting them to be the one communicating the changes, and the clients are expecting the accountant to kind of pick it up. And there's already a lot of burden on their shoulders. So from a software vendor perspective, we're trying to do as much as we can to help spread that message. And when the responsibility is shared, I think it's better for everyone. So a quick wrap up there on all of this. I think that the challenges that in a sentence is change is uncomfortable, especially change when you've not signed up for it and it feels forced. But the opportunity of digitalizing income tax or MTD for income tax is great for, especially for those early adopters. There are firms who are super digital at the moment, riding the crest of that wave. They're already prepared, and I can see such strong advantages in being in that position, both from a client relationship, from a pricing perspective, and then all the benefits I just spoke about, like using tools like Free Agent and Nomi allow you to have all the benefits of having the data in one place, like your reporting or your cash flow, your insights, being better at business. And I think as a final sentence, MTD isn't just about compliance. I think it's a chance to modernize how accounting gets done, or bookkeeping and accounting gets done. Final slide from me, and then we'll kind of go back to the room. I think I've called this the future, like how digital adoption will keep evolving. Today, the change is uncomfortable, but tomorrow, those who adapt early will thrive. And it's kind of what I've just captured, really, if I'm honest. But this digital tax, this digital adoption of how businesses are run in the UK is not going to stop. It will accelerate. I mentioned e-invoicing before, and then potentially into the corporation tax space. I think there's going to be quite a bit more there. And software is going on that journey. And I'd encourage everyone to trial different softwares to make sure that they meet their needs as a practice or your needs as a small business owner. And I think you'd generally be surprised by how much is already there in the software space, both for meeting the MTD requirements, but also the digital requirements of firms wanting to be at the crest of that wave. So I think that's probably me for just now. I'll stop sharing, and as you said at the top of the call, I would like to go into a bit of a Q&A on this, just to see if there's anything that people want to cover. Gareth, I think there's been quite a few questions in at the moment, but I'll hand back over to you.
Amazing. Thank you so much for that, Stu. That was really useful. What I'm going to do is I'm going to ask one of my own questions first, selfishly, and then while you're answering it, I will go through some of the questions in the Q&A. So to begin with, where does MTD lead to, do you think? Sort of like, so 5 or 10 years down the line, what do you think is coming? What's this the catalyst for? Because like, you think about it, this is just the beginning, you know, it's the beginning of a path, right?
Yeah. So I think there's a few things. I think the first thing I'll say is, as a software vendor building this, and we spend every week we're with HMRC, we know nothing more than has been said publicly. So I'm not, it's not like I know things I can't reveal. There's a ton of speculation around what this might lead to. I think if I was a betting man, I'd say that we'll likely see quarterly payments at some stage in the future, which have pros and cons. The pro is, imagine never having to explain payments on account to a client again, and that not existing. That would be lovely. But then there are cons about updating that on a tax estimate that is only as accurate as the data you put in. So when we talk about what it might relate into, I think in the very short term, what I'm expecting to see is a lot of the quarterly updates, especially in the first year, not being a strong, accurate representation of what the tax estimate is going to be at year end. I think that there's still going to be folks that submit as the minimum possible in year, and then come to the final declaration and undo all their stuff, and that will be radically different, which causes a problem if the reality comes true where you want to make 4 quarterly payments, because essentially you might have 3 small ones, 4 small ones, and then a big bang come January. But I imagine that's probably where they'll go to. I think going back to the kind of slides, I definitely see this journey that HMRC are on, Companies House as well, as a positive one. There's lots of road bumps along the way, but e-invoicing alongside this, I'm kind of bring that into the same boat. MTD is going to be really good for digitalizing clients and getting businesses far more online. I think e-invoicing is going to be the biggest change that makes that a reality, and MTD fits as a tax around the requirements there. So that's where I imagine we're going to be. I don't know how long. I don't think it's going to be soon. The other forecast I'll give is I think it's going to be a really interesting run up to April, especially to see what HMRC might do around penalties. I don't know. I know how many people are in beta. I don't know how many people are actually going to be signed up come April, or at least by before Q1 isn't requiring filed. I imagine if that's way below where HMRC expect, they might look to waive penalties. But again, I've got no information on whether that's likely going to be the case. It's certainly not their line. But I could see that becoming a reality, I think, if it's far lower than expected. What about you? What do you think, Gareth?
Yeah, I can imagine that about the penalties. I saw some figures the other day. I think this was from 3 months ago or so, but apparently the take up of the beta of the MTD was 0.34%, which is pretty startling, and so we're talking to people that are doing the beta, so we're seeing the more proactive people, but there's a lot of people behind that who are not engaging with it at all at the moment.
I totally get. I think that there's a slight worry there. I don't think there's any chance now it's going to be cancelled. I just cannot see that world whatsoever. And there's a kind of few people around the market I look to as really really knowledgeable folks in this space, like Rebecca Bennyworth, for example, or Chris Downing. And I don't think there's anybody has this sense that it's not coming. So on the flip side of that, when you rightly call out the amount of people that are, I wouldn't say ignoring it, because that feels like a blame, but just aren't ready to prepare yet, that worries me, because I don't think it can be cancelled.
No, I completely agree. I think they're too far along the path now that it's going to happen. I think there's definitely something interesting with you saying about potentially HMRC waiving the penalties, but let's not rely on that. But yeah, no, and I think looking further ahead, I think you've hit the nail on the head. I think eventually going into those sort of like quarterly payments, it just seems sensible that is how it works at some point. Like you mentioned the payments on account. Like at the moment, if you do a tax return for the first time, you're paying tax on your self-employed income nearly 2 years after you first started earning employed income, like self-employed income, which is actually, it's insanity. If you have a really good year and then a poor year, I'm sure with all the accountants on here, I'm preaching to the converted. But I think this helps to even it out a bit for people. And I think once it becomes the norm, we'll think, why the hell was it not like this in the first place? So yeah, okay, let's move on to another question. Here's a good one. This might be a silly question. How does MTD affect charities? Do they need to go MTD compliance too? If not, will it be covered later? Many thanks.
Do you want to take that, or do you want me to take that?
I can take it. And then you can correct me if I'm wrong. But so my understanding at the moment is that it is not going to affect charities in the slightest. As far as I'm aware, there's not conversations or published legislation on changing how charities currently act in a dramatic function in terms of their submission frequencies or sort of practicalities there. So I think you'll be okay as a charity.
Yes, it's absolutely right. It's definitely designed for the self-employed individuals and landlords. I think the most common question that comes up is, what about partnerships as well as charities? Definitely not within the scope at the moment. I think last time I spoke to Craig at HMRC, it was very much that this isn't we'll just wait and see. It's very much like they're outside of the scope and still within the SA flow. I don't know what, go back to your previous question. I cannot imagine that's going to be the long-term plan, Gareth. I feel like it doesn't really make sense in the long term to live in a tax system where self-assessment always exists. I think transitioning to an MTD style model, at least for your charities and your partnerships, one day is the way to go for the benefits that we've kind of discussed, and the being on a software versus shoe bags of receipts or whatever the alternative is, non-digital. But yes, charity income's not there. There's one interesting element about partnerships from a build perspective, just in case it interests anyone on the call. There's still the situation where you can have partnership income but be a sole trader, and that's still an element that HMRC are adding as support, and then the software will support that. So that will kind of come in as an additional income source rather than like your primary income source as a partnership.
And do you want to just clarify the situation of partnerships as well? Because you mentioned partnerships a little bit. Let's clear that up. So if you're earning 70,000 or so through a partnership, where does MTD affect you?
No, it's your self-employed income and landlord. So if you are only within a partnership, that doesn't apply for MTD. That's outside of the scope completely. But if you are a sole trader and you have partnership income, but you still only your sole trade income and landlord income that counts towards that threshold, then you'll still record that as your additional income sources within MTD, which is exactly the same as if you have PAYE income or CIS income, and you've got to include this as part of your tax return or final declaration, as it's known under MTD.
Amazing. Cool. Thank you. I've got one here. This one, you can take this one, Stu. As a director of a property rental company, I submit business tax each year via Nomi. I'm a bit confused. Does this new requirement apply to business tax submissions or to self-assessment tax returns?
Cool. Yeah, I can take that. So I think it all depends on whether you're incorporated or unincorporated. So unincorporated landlords, i.e. self-employed or self-employment income and property income falls under the scope of MTD. If you're incorporated as a company and you have property income, you are not falling within the scope of MTD. So I think that's the clear distinction to make. And it's all about that incorporation. So Free Agent has a landlord product, Nomi does as well, where you can file your obligations as a landlord, but it really depends on whether you are incorporated and it's classed as a business in that regard or not.
Amazing. Someone has said, presumably you can have MTD software which is different to your self-assessment software. So I'll answer from a Nomi perspective first, and then you can answer from a Free Agent perspective. So within Nomi, it's built within the self-assessment software. So there is, if you're within someone's self-assessment, you can click in MTD for income tax, and then you go into that section, and then you complete the quarterly submissions there. How does it work within Free Agent, Stu?
Yeah, exactly the same. So we have a self-assessment area. We're actually about to rename it to income tax area because MTD isn't a self-assessment anymore, hence why it's not MTD ITSA like it was. They dropped the SA because it's not self-assessment, it's just HMRC are doing the calculation. So shortly it will be in the income tax area within a client account, and you see the full list of all the tax years. And if you're signed up to MTD, you'll be taken to the MTD section, see those individual quarters and final declaration. Or if you're still using self-assessment, then you'll see the self-assessment returns. But I guess to answer the question more directly, you can absolutely split it. If you want to go to the extreme, you can do your quarterly updates on one software and your final declaration on the other. I think a lot of software we see will house the bookkeeping, but there may be a third-party tax filing software that does all the tax filing, whether it regards if it's corporation tax or payroll or now MTD. You can split software for even that within a single tax year for a single taxpayer. So that's still allowed to do.
Amazing. Thank you so much. Let's have a look. What have we got? What would you say is the best way to communicate, the best way for a firm to communicate the changes without causing panic? So it's a difficult balance between getting the urgency without chaos.
So I would always say this is whether it's liked or not by a firm, I think it's something that the firm should be doing. So HMRC are writing to all taxpayers affected, and they're only writing to those ones affected, as in the ones that we caught April 2027 and 2028 are not being written to at the moment. I think the new adverts with the unnamed tax robot, tax face, what we'll call them for just now, that are quite good at capturing that it is only over a 50k qualifying income and not anything lower. But to answer the question directly, I think if I was in a practice right now, I'd be contacting my clients right away, even if it is just you don't need to worry about this thing, we've got this, we'll contact you later. I think that's the right thing to do right now. Like I said a little bit earlier in the call, there are a lot of providers out there, especially software providers. You can go into Free Agent's website and find all this if you want, or other competition and software does apply, which provide email templates, provide guidance that you can give to your clients. You don't need to, I mean, you can stick your logo on the front if you'd like, but very much we've done that so that you don't have to think about that. Because I think there's a lot of burden already on the accountant and the bookkeeper. So yeah, I would say over communicate, I think, is probably the answer in a sentence, and look to get help from others where you can. And by others, I mean vendors rather than other accountants.
Great answer. Can we still accept paper receipts to input on our software, or does the client need to supply the information digitally? Before you answer that, if anyone else has got any questions that they want to ask us, keep them coming on the Q&A. We've got some great questions on there. So yeah, just keep them coming and we can go through them.
So paper receipts are still absolutely fine. There's nothing being mandated through MTD that says that all receipts now need to be done by email or anything like that. The key is digital records, and there's a lot of kind of guidance as to what that means. But essentially, that means that in your software or spreadsheet, if you're using bridging software, you need to include some specific information to be classed as a digital record, such as the date of the transaction, the amount, what it relates to, and then if you're VAT registered, kind of VAT amounts as well, especially for MTD for VAT, let alone MTD for income tax. And that information cannot then be keyed into a submission portal from HMRC's end. That needs to be stored in a digital format and then filed via a digital link. So Free Agent, Nomi, plenty of the softwares out there on the market will allow you to create that digital record in their software, and that might be from a paper receipt, and that's absolutely fine. But the key is that it's stored digitally and then it's filed either as part of a quarterly submission or the final declaration to the revenue digitally. So there are plenty tools out there, as I mentioned before, and Free Agent has one as well, where you can go on your mobile app, take photographs of receipts, that then stores the digital record, and you've absolutely met the requirements of digital record keeping there.
Perfect. Thank you, Stu. Let's go to a bit more of a controversial one. Pricing. Should firms charge more because of MTD?
I think so. I think that if you're doing more work, you should charge more. I don't come from a practice background, so a lot of everything that I stand for and I know comes from spending a lot of time in the industry rather than doing it myself. So I'm really keen to hear your thoughts, Gareth, especially coming from that practice background. But the way that I understand the market, and I've heard from hundreds and hundreds of firms, is probably underpricing the value of accountants and bookkeepers over time. That's generally been a thing, that undervalue your time, undervalue your services. And I think this is a really, really good opportunity, especially because it's quote unquote forced upon the market, to reevaluate that and to better align prices to value offered. So if I was in practice right now, what the kind of pricing matrix I would go for is almost like a three-tier approach. The first tier being you do it all yourself. Like you do all the quarterly updates, you do the bookkeeping as a client, and we'll do your final declaration for you or your tax return, or maybe that'll be the service we provide, and that's probably the lightest touch and the lightest cost. And then there's a middle ground that is we'll just review every submission you make, but you do your own bookkeeping. And then there's probably the third tier, which is we do everything for you. Like you still need to have these minimal obligations like connect your bank feed, but we'll do all the reconciliation for you. And that's how I would price. And I would imagine that when you break it down and work out the time spent versus the cost charged, prices will rise from the typical self-assessment service of we'll review your transactions and do your return for you. And I think that's right if there's been more time spent on it from a practice perspective. But what about yourself, Gareth?
Amazing. Yeah, I would broadly agree. I think accountants have consistently battled this guilt about charging for their services, because I think where it comes from is they have enough clients come to them and say, oh, I've got to do this because it's an obligation. And then so you feel like an inconvenience on a personal basis. And that has seeped into the psyche of a lot of accountants. And I speak to a lot of practices every day. And the one thing that would make the biggest difference to practice owners' lives is pricing properly. But that's a whole different webinar.
Yeah.
But I would say for MTD is it is exactly like you said, Stu. There's more work to be done. You're running a business at the end of the day. You're providing a service, and that service is, you can actually add so much more value to your clients through this. This isn't just another form to fill. This is an opportunity to have an extra step, an extra interaction with your customers. And yes, it's another thing to chase, it's another thing to do, but it allows you're not looking at figures from 12 to 18 months like gone. You're looking at current figures. So you can actually look at this and go, oh, okay, you're a bit tight for cash at the moment. Can we do anything to help? Have you looked at our funding partner? There's so much more value that you can add. And if you charge properly, it allows you to resource properly and provide that value. And if you're not charging for it, then you're just going to become overextended and you're going to struggle to keep up. You're going to struggle to actually provide that extra value.
Totally, Gareth. I think that's that shift from accountants and bookkeepers being the people that crunch the numbers into being a business advisor. And this is another opportunity to be the best friend of your clients, that helping voice, that guiding hand to making them better at business. And I think that making this digital, or making tax digital, and the clients being on software, especially if you're going to go for non-bridging software, to actually take advantage of that, then the ceiling of what you can provide in a firm is raised massively. I think I can speak for Free Agent, but as I say, there's plenty of tools there that as soon as you have a bank feed and getting those receipts in, you have cash flow at your fingertips. You don't need to kind of go and create this stuff anymore. It's right there in another tab in a software that tells you all about their cash flow. You can provide that as a service, and all those benefits on top of just being an accountant, because that doesn't really exist anymore. You're a business advisor.
And I think if I was an accountant, I loved what you said there about helping them to run a better business. I like that as a little line. That was really nice. And I think if I was still in practice, I would run a series of training, probably in February when I'm a bit less busy from tax returns. But I'd run a series of trainings that says, okay, we're putting you onto this software, which you didn't need before. This is how to make the most of it. And you could do that for free. There's a huge value add. You could do that as a paid course, as an extra money earner. And you can, like that, people will pay for that because they'll be earning more money because they'll have a better understanding of their finances. They'll be able to plan, and it gives them that peace of mind that people are willing to pay for. Any final words to add on that before we move on to the next section?
No, I don't think so. I think that's covered it really well.
Excellent. Somebody says here, can we file nil returns each quarter? I guess with the aim of just basically doing a tax return at the end of the year.
So my understanding from HMRC is to date, and I'd recommend everyone checking the guidance for the exact wording, because I don't have the exact wording to hand, but I believe nil submissions will fail. You cannot submit nothing, and that's a technical like block fail of the submissions. But my understanding is that if you were to submit relatively low amounts or do the bare minimum in a quarters 1, 2, 3, and 4, and then everything were to come in at the end of the tax year and adjustments, or quarter 4 was massive but 1, 2, 3 weren't, then that doesn't fail or cause any flags on HMRC's end, at least at the moment. I imagine they'll probably move to a system of encouraging, I don't know, maybe forcing one day, but certainly encouraging it to be as accurate as possible throughout the quarters. But my understanding is that only nil fails, like £1 doesn't fail.
Amazing. Thank you, Stu.
That was as diplomatic as it can be put without speaking on for HMRC. But that's
I like
pretty
it.
much
You really towed the line there. Perfect. Okay, so one here. Will the quarterly updates just submit the total income and expenses total, or will it be a similar breakdown to the profit and loss report?
So this depends, doesn't it? There's a few situations where you are allowed to only submit the totals. And for the majority, you have to also provide the breakdown and the nominals, which I am presuming that pretty much all software will allow you to do. I think a good example, I don't have the list right in front of me, but if you are a landlord with joint property ownership, so you only have a percentage of that property, you don't have to submit the total breakdowns of each nominal that formulates your income and your expenses in that quarterly submission, for example. I think different software are going to offer different options there. But the majority of people with the sole trader and income, or sole trader and landlord income, will need to submit all the breakdown of their totals.
And it's broadly, it's the same categories that you put into the actual tax return itself. So it's less categories than most accountants would collate for a full profit and loss. So it's still kind of in the same format that you're used to filing on an actual self-assessment.
Yeah.
Lovely stuff. Somebody says here, I so nearly said a name then. Where are we getting all these extra hours, please? I'm not sure this is one necessarily we need to answer. But I think, yeah, it's a difficult one. There's a lot of pressure on accountants, like as Stu said earlier, you know, you've got your plates full anyway, and then you've got this extra stuff to do. I would say it's, if you've got the ability to back yourself financially and get some extra resource in, this would be a great time to really double down on that and try and elevate the service that you provide and really increase the value. But also I understand that everyone's in different situations and you might not want to do that. You might just be happy as a sole trader, and that's fine.
So I think on top of that as well, Gareth, it goes back to one of the slides I showed. I think the real success that we've seen so far, doesn't mean it's going to be the right blueprint for everybody, but the real success is if you can get your clients onto a software that is easy enough for them to do the bookkeeping. It supports their bank feed, let's say NatWest or Metal, something like that. It also has a smart capture, like data extraction on a mobile app. That is the majority of what you need, if not all in some cases, for those quarterly updates and that filing. Over and above that, that should hopefully save time in the long run for yourself in a firm, because you have clients that can do that. Some softwares are absolutely not appropriate for clients to be going in and doing things, or even they might not understand. Some absolutely are built for exactly that. Very biased in this point, of course. But I think that's a great way of saving time.
Amazing. Thank you. Someone has asked MTD and CIS, how would it work?
So CIS is included as an additional income source. So you have all your sole trade employee, sole trader income. You have all your landlord income, property income, if you have that. And if you also have CIS deductions that are held somewhere else, contractor somewhere else, that's included essentially as an additional income source, which means you can add it as part of your quarterly updates if you want to, but you have to add it at year end. So I'll give you a good example of how this works in Free Agent. So we have the quarterly updates, the income and the expenses that are done based on all the bookkeeping data. And that's kind of the income and expenses exactly as you'd imagine. But if you're also having CIS deductions made, you can, every time you click the button to submit to HMRC or just fetch data from HMRC without submitting, if they know about those CIS deductions because they're made through PAYE or anything else over outside of Free Agent, we'll pull down that information into those relevant boxes for you, update that tax calculation that HMRC makes so that you can have a more accurate position throughout. So there's no change to the bookkeeping here for CIS. If you're a contractor or a subby, you still do everything as normal. But if there are things not in your software, your accounting software, but are done outside, like PAYE, for example, is exactly the same situation here at CIS. That is then taken into account by HMRC and reflected back into your software. So you have a total of those deductions.
Amazing. Thank you. Great answer. If anyone has any more questions, we're just going to go into the last couple of questions now. So if you've got anything, then just pop them in, and then we can answer them before we wrap up in a minute. Okay, let's go with, will MTD actually improve compliance or just create extra work? In the short term, we're looking at. So we've spoken about the long term.
Yeah.
In the short term, is it going to make things better?
I'm not sure it's going to improve compliance if we want to narrow it into a single lane like compliance. So if I'm understanding compliance as, will it help people pay the more accurate amounts of tax? I'm not sure it will in the short term. I think we need to see. I know that's what HMRC is saying. I don't think we can have any conviction until things actually start to happen. What I hope it will do in the very short term is, by seeing tax estimates, if people are doing the quarterly bookkeeping regularly, it will help people save for the right amount of tax. And one of the benefits that we've seen of the firms going through the beta testing is the encouragement of clients to get a business bank account. I think that's maybe the biggest hurdle in all of this, is people use personal bank accounts and have multiple income streams, and that becomes very, very messy. But getting a business bank account and using the concept of pots or spaces, as all these kind of banks kind of call them, and actively putting aside the amount that comes from HMRC's quarterly estimation. And if you're doing your quarterly updates regularly, as I say, get a bank feed, do the reconciliation once a quarter at the very minimum, that saving for tax should be better, let alone whether the actual paying is going to be more accurate in the short term. What do you think, Gareth?
I like that. I actually don't know. I feel like if somebody is not being compliant intentionally, this is not going to change anything. But I guess where it's picking, I guess where they're hoping to pick up the gains is the people who are not complying intentionally get thrown out by the algorithm a bit more because they're getting more information. And so I guess in 3 or 4 years, when they can start using the data, feels a little bit big brothery, but also I can see the advantages. And yeah, I think there'll be gains for the taxpayer in 2 or 3 years time, I would say. And I really like what you're saying about people actually having the business bank accounts as well. I think you're right, that is just a massive hurdle, because the amount of people that are just using a personal account is quite staggering. So yeah, I think that's fine. You look like you have a bit more to say on that.
No, I was just thinking about it there. I mean, it's definitely something that's come up a couple of times before, especially around events. I didn't include it in the slides, or the deliberate talking points, is around that big brothery point that you mentioned. And I in no way want to dismiss people's fear about oversharing information. I completely understand you don't want to give away to HMRC more than you need. I think the point around quarterly updates and the 3-line accounts versus sharing everything is nothing is really being changed at year end here. It's at the final declaration that is somehow providing HMRC with much more information about your business than self-assessment actually provides. That isn't really changing. It's maybe more often, and that's a consideration, but I don't get the impression at all from the regular chats we have with HMRC in their kind of long-term roadmaps that they're looking to do more like quote unquote big brother stuff with the information and crack down on businesses based on at least this MTD for income tax, for sure.
Great, perfect. Lovely. So I've got a follow-up from the CIS question. Someone says, if I only have CIS income, which is over 50K, do I need to submit quarterly updates?
Do you want to take this one?
I don't know the answer to this one, to be quite honest. So if you know the answer to this and you're confident enough, then go for it.
Yeah, absolutely. It's all about self-employment and unincorporated property income. So MTD for income tax applies to all self-employed people, all unincorporated landlords who have that qualifying income over 50K. So if you're a sole trader and that's the source of your income and you meet the thresholds for the 50K, you're in MTD. If you are a small limited company and you're hitting this through CIS income, you're not an MTD. So it's hopefully as simple as that. What I was talking about the CIS earlier, maybe I misread the question or misunderstood, but that was I was trying to clarify that if you are not seeing any of your CIS deductions because someone else is doing it on your behalf, like the contractor-subcontractor relationship, that's still included in your tax return process, although you don't need to kind of key in the figures manually.
Amazing. Cool. Thank you so much, Stu. We will wrap this up now. We are at 12:59, so I think we've timed that very well. Thank you so much for your time and imparting your knowledge with us today. This has been a collaboration between Free Agent and Nomi. We've got an integration between Nomi's bookkeeping and the Free Agent final accounts, which is why we've done it with Free Agent, if anyone was curious. Yeah, I really appreciate the collaboration and the fact that we can come together and provide value for our shared customers anyway. So yeah, thank you so much for your time, Stu.
Great, thanks for having me, Nomi, and it's been a pleasure. Enjoy your days, folks.
Amazing. Have a great day.
Thank you so much. Bye. Thanks, everyone.